Support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries.
Well, it seems there is a bit of a contradiction present in this economy. Almost universal opinion says that in general, the current state of growth right now is behind expectations and past recoveries. But that's hard to square when you read the list of new and expanded businesses. Welcome again to the most widely watched source of Carolina business and public policy. I'm Chris William, and over the last few weeks and months, just the sheer amount of new jobs announced is pretty exceptional. I'm not talking about 10 or 20 or 50 new positions, but thousands. New corporate citizen relocations as well as big economic development announcements are included in that. So what's behind it and where does it lead? Well, we'll continue this ongoing 23-year dialogue in just a moment. And later on, financier Scott Custer from Yadkin Bank joins us.
Major funding also by Novant Health, bringing you world-class technology, clinicians, and care when and where you need it. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. And by Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. This edition of Carolina Business Review was recorded September 19th, 2014. On this week's program, Doug Copeland, president and publisher of Triad Business Journal, Nelson Lindsay, director of economic development, Richland County, South Carolina, and special guest Scott Custer, president and CEO of Yadkin Bank. And now, here's Chris William.
Welcome to our program. Doug, welcome back. Nelson, good to have you here.
Thank you.
You know, let's talk about this a little bit. In the Triad, and I want to read this because I got to get this right. So Wake Forest Baptist out of Winston, Vidant, and then Wake Med from Raleigh are all in this three-way JV that are going on about healthcare. And then you've also have the High Point Regional Assimilation with UNC Healthcare. And then, as you mentioned before the program, you've got Cone Health and Carolina's healthcare system. I mean, clearly, there is something going on in healthcare. We all know about the Affordable Care Act. Is this just about survival? Is that what they're trying to do?
Well, the dynamics have changed in healthcare. There's no question about it. And healthcare institutions have to do a couple of things in order to survive. And the cost of healthcare is not a new issue. That's not an issue since President Obama was elected. That's a long-term issue. So they got to do three things, some of which is driven by the Affordable Care Act. They've got to get their costs down as low as possible, and that's a part of these affiliations, mergers, et cetera, that you're seeing to get economies of scale. The second thing they got to do is they got to keep patients out of the hospital, and some of that is best practices. And they do that by affiliating with others who have programs in place, sharing ideas, et cetera. So all this is a part of why they're affiliating, why you're seeing mergers. You mentioned Cone Health. You know, they acquired Alamance Regional about 3 years ago. You talked about the affiliation of High Point Regional with UNC Hospitals, UNC Health Systems. All this is about economies of scale from a purchasing standpoint, but best practices, keeping people out of the hospital. Got to lower costs.
But Doug, there has to be a big momentum, and I'm not trying to put words in your mouth, but there has to be some real opaqueness about where the industry is going to be once the affordable health care, once the Medicare pricing and payments come in. I mean, isn't that a big part of this?
Well, I think it is, and I think people are frankly scared. I mean, they have to be.
I think it seems like it's a good word.
You know, it's a word you don't like to use in business, and particularly in big business, but the numbers are so humongous in healthcare. Failure to keep up, failure to make the right transition can send somebody sinking. And Baptist numbers, Wake Forest Baptist numbers have not been good, and they've had a couple of bad years of numbers. you put that against, say, a Novant that practices in the same city, but has a much wider geographic platform, and their numbers are pretty strong. So we're seeing a dichotomy between various healthcare systems, not just in the Triad, but all over America.
Nelson, not going to ask you to wade into the debate around healthcare and where it's going, but we would like to, at the top of the program, we talked a little bit about the pretty stunning economic development announcements across the Carolinas. MetLife down in South Carolina, Boeing, the gift that keeps on giving, BMW, the gift that keeps on giving. But some of these economic development announcements are thousands of jobs in just one announcement. So what's going on?
Well, I think you're seeing a couple of different things. You're seeing a resurgence of manufacturing in the U.S. You're seeing reshoring occurring back from Asian companies, especially with Walmart's reshoring initiative. And that's really touching all areas of the state, not just the urban areas. Actually, it's more focused on the rural areas. So a lot of that is driving this renaissance, if you will, for manufacturing in the Carolinas.
So in North Carolina, Doug, even though we do get big announcements, not even though, but in light of still large announcements, when you net that job number out, it can be in many cases it's not huge growth net for North Carolina, even though we're getting some pretty large developments. And you've seen it in the Triad? Am I putting words in your mouth?
No, not at all. We are seeing it, not to the extent of some of those mega projects you've talked about in the Charlotte and Raleigh-Cary markets and in South Carolina. We're not seeing that. What we're seeing is sustained growth. And the growth if we might just pick one industry, in the aviation industry in the Triad is pretty strong. HondaJet, Timco, BE Aerospace, Cessna, that's providing steady job growth. And we have a couple of sectors that are doing that.
Now, Nelson, on that same thing, I know you're in Richland County, tends to be more Midland, South Carolina, but and this is a question for both of you. As Greensboro, Winston-Salem, High Point, as the Triad fleshes out this aerospace industry, the Low Country in South Carolina, already got a pretty good head of steam on that.
Right.
What would keep local developers like yourself from reaching out to your counterparts up in the Triad? And same thing. I mean, states, state commerce departments are one thing, but what about municipality to municipality? Isn't there some leverage here? Isn't there a way to go?
Well, I think our focus would be more on the supplier base for those larger companies, not so much of trying to pick off within our neighbors.
And I'm not talking about picking off. I'm really talking about how can we work together, Doug?
Well, I think the big issue for us in our market, and again, it is manufacturing, whether it be an airplane or seats or components, et cetera. But our biggest challenge is enough skilled workers. That is the only thing limiting growth, at least in the Triad, North Carolina, turning out enough folks that have this advanced manufacturing skill and acumen. And it gets back to a lot of basic education in English and math, et cetera. But if we had an unlimited supply of skilled workers, I will tell you we would have more and more economic development announcements.
Can't you crank that out at Greensboro Technical Community College?
I think at Guilford Tech, at Guilford Tech we can, but they're limited by two things, and most of it's capacity, which is money. Just to give you an example, Gary Green over at Forsyth Tech, because all machinists, welders, et cetera, about a year ago announced a third shift welding program. So he's teaching welders on the third shift. He didn't do that to supply third shift employers, which they needed. He did it because he had no more capacity. He had no more space, no more opportunity. And I think that's very innovative, candidly, to have a third shift technical school education program. But the driver for that was lack of resources.
How do you reflect on that? South Carolina Technical College System, same issues, this workforce development, trying to be in the DNA of a company, and especially in the apprenticeship area.
It is. The apprenticeship is a fabulous way of growing the workforce, especially those younger workers that don't have the skill to move up in the company. So that apprenticeship program allows them to learn on the job and in the classroom, and hopefully raise their skill level such that they can move up within the company. And our technical college system does a fabulous job of training folks that come to them. The issue that we have is we've got to get more families and young folks interested in manufacturing type jobs, because that's where our growth is right now, and we've got to be able to supply that pipeline.
Yeah, thank you guys. Our special guest in just a moment. Next week on this program, it was a surprise announcement back in the spring of this year when the Charlotte mayor was arrested by the FBI and subsequently resigned his position. That was Patrick Cannon. Next week on our program, he is the current Charlotte mayor. Dan Clodfelter was not just a senator, but a councilman and also a member of the Planning Commission. He will be our guest. That's Charlotte Mayor Dan Clodfelter. And then in 2 weeks, former Charlotte Mayor and now North Carolina Governor Pat McCrory will be on this program as well. Not so long ago, there were at least a dozen banks in the Carolinas start up every year, and these so-called community banks were a way for local leaders to capitalize on civic connections and local depositors to get up close and special access for business and personal finance. They were small banks that had higher access. Since 2008, that startup activity literally dried up. Now, community banks, as they were defined, are a rare breed. Joining us again is the president and chief executive officer of what is being defined as North Carolina's largest community bank, Yadkin Bank. We welcome back Scott Custer. Mr. President, welcome back.
Thank you, Chris. Nice to be here.
Nice to have you here. You're smiling. That's a good thing in banking these days.
I hope it's a good thing. I am smiling because, what other choice do we have? We might as well.
Well, Scott, you've been through the wars. You've been around the block once or twice at RBC or Advantage South before this merger, and now you've got this thing called the largest North Carolina community bank. You don't want to start a bunch of ways, but let me go back, and when you look at where you are now, and not post-merger, but post-2008, when you look at your loan portfolio, the growth of your loans, the quality of those loans, and you read and look at something like the Matrix, and you look at that, what is it telling you about the economy?
Well, it's telling you that things are certainly better today. Are they back to where they were pre-2008? No, and they might not get back there, because I think pre-2008 was really a period of time that was, I think, proved to be unsustainable, and we all know some of the things that led us to really what became the Great Recession. But as we fast forward to today in 2014, clearly loan portfolios at banks are better. They've been able to be cleaned up. Are they totally clean? No, but they're much better. The environment to do business in, loan growth is picking up. You see business activity. You were just talking about it earlier. You see business activity at a different level than it was even a year ago. So, it's a more healthy, vibrant time, but it's not back to where I would say we're fully recovered.
How do you, and again, from 2008, Scott, to present day, the regulatory environment has gotten much more compliant, much more rigorous for banks. There's no surprise about that. But internally, you went through it. You ran a bank during that period of time. How do you make sure, and not necessarily you, but how do bankers now make sure that they're self-policing so they don't get out over the tips of their skis, metaphorically, and don't let credit get to where it was, and don't believe that trees grow to the sky? I mean, how do you make sure that euphoria, enthusiasm doesn't carry the financial services industry back into another direction where we get into trouble?
Well, it's a real concern, and I think that what I hope is that we've got long memories and we can remember some of the sins of the past that took us down those roads that led to what happened in 2008 and beyond. And there are, thankfully, it's a much tighter and higher burden with the regulators that you've got to be mindful of, and they're very much involved in the banking business today at just a totally different level than pre-recession. And I would just say that there's some simple rules, at least some simple rules that we try to live by, and that is, concentrations can kill you. If you put all your eggs in one basket, there's a good chance if they get rotten, they can spoil the whole bunch. And so that's one thing. So let's run a diversified business that's got that's not counting on one thing. Have a good risk management foundation at the core of your business. build the right internal controls, and then hire the right people that can go execute. Those are the things that I think are what successful companies are doing today.
Doug?
You in your merger, you had a great geographic platform. I don't think there was a single branch overlap, but you got some holes across North Carolina now. Yeah. I know you got to absorb what you've done, but are there some places you're looking at filling in some of those gaps?
Well, that's a question I get frequently, and we would like to. First of all, the merger did give us a statewide distribution network, and that really helps us. We have an office all the way out on Ocracoke Island to the east, and we're in Linville and Boone in the west, and a lot of points in between. We're not in the Triad in a significant way. Clearly, that would be a place we would like to be in a more meaningful way, and time will do that. We have our heads down right now, trying to get the merger done. We have a conversion going on this weekend, which is a significant event. And we need to prove to our shareholders, regulators, and other constituents that that what we said we'd deliver in this merger, that we actually deliver. And early returns are good, so I'm optimistic. But we're gonna find ways to grow. That's in our nature, and we'll continue to find those ways to grow.
One of the things that I've noticed in the past is community banks, they've distinguished themselves from the larger ones based on customer service, personal service. And as technology changes the industry, how do you continue to distinguish that service in a more technology-driven industry? And kind of related to that, if more people are going online to do their banking, how does that impact the bricks and mortar side of it, the branches that so many communities rely on to have? So where do you see that going?
Boy, that's a lot in one question right there. I'll take it in three parts. First, community banks at their core have survived and prospered because they have been viewed as delivering a level of responsive local service that a certain segment of that market wants and desires. And I don't think moving away from that is a recipe for success. I think community banks will always find their sweet spot, delivering local, responsive community service with local bankers, local decision making, and the things that make those companies a little different than their larger competitors. That said, you can't just have your head in the sand and not know that the world's changing. And so while what we've got to figure out is how we mix the things that made community banks successful with what we've got to do to continue to attract that technology-driven customer, knowing that people are going to interact with us in different ways, not just in our branches, and how we stay on that, not bleeding edge, but on that edge that we need to be on to compete. I don't think branches, I think the demise of the branch is a little bit overblown to your final point. I think we've got to figure out new ways to think about what we do in branches and how we can drive more revenue out of that bricks and mortar, and maybe even reinvent what that bricks and mortar looks like. Does it have to be a 2,000 square foot with 10 employees? I don't think it does in the future, but I think we can still use those facilities to create good customer experiences and to drive revenue through those facilities.
Yeah, Scott, a lot of times you talk about innovation, not you, but in general, we talk about innovation, then we talk about millennials, which is obviously the one of the larger demographics that folks are looking at for the future. So, and it's been shown that millennials have a higher level of confidence in community banks than they would the bigger banks. How do you capitalize on that? How do you be cool for millennials without trying to be cool?
As I said, I'm not sure I have a great answer, since I'm probably not that cool myself. But I would say that we need to think about our product design, how we deliver that, and how are those young people interacting with us. I have two millennial children in their 20s, and think about their buying pattern and what's important to them. It's totally different than what was important to me at the same point in my life. So we've got to gear our delivery, if you will, to that segment. And I think it's about having ease of access. It's about having the right product, but then it's still about having that banker that can deliver the personal service.
Mm-hmm. Doug.
Scott, earlier you painted a picture of what a huge stake you have across North Carolina now. I want you to put your good corporate citizen hat on for just a second. There's no question that in economic development in North Carolina we've had a hiccup, and the hiccup may be kind to what has happened in terms of process. The growth of North Carolina, success of North Carolina is directly attached to your bank. What's your advice to the governor and the legislature? I mean, we got to fix something. You're a business leader. What would you tell them to do?
Well, that's a $64,000 question, isn't it? I'm not sure I've got the secret sauce on all of that. I do think that a dedicated economic development effort led by the governor to be out front and not so, quote, leading from behind, but to make that a priority, to be out front, to talk about it. I think sometimes, just talking about our successes, being more intentional about what we're trying to accomplish, being more being more of a cheerleader about what this great state has to offer, and how we do that. So often people get hung up in taxes, and we could debate whether our corporate taxes are too high, too low. We're dealing with a budget deficit today, so I don't even know that I'm certainly not qualified to get into that. I just think being a little bit more of an out front cheerleader, an out front spokesperson, salesperson about what this state has to offer is where you start, and then you get people excited, and then momentum creates momentum, and pretty soon you've got some things that, quite honestly, our friends in South Carolina have done better than we have.
Well, and arguably Nikki Haley has done exactly what you say, but before we leave that, your chief operating officer, Lee Roberts, has left recently to be in the McCrory inner circle. He replaces Art Pope as North Carolina budget director. So here's a guy probably not as polarizing as Art Pope. So how would you forecast Lee's influence on the governor and on the state going forward?
Well, Lee's number one, he's a thoughtful guy. He's a smart guy. And I think that he will be a steadying influence. He will, as you said, he won't be polarizing. I worked with Lee for a long time, couldn't tell you what political party he's really affiliated with, not if he is at all. So I think he's the kind of guy that can walk down both sides of the aisle, create some consensus, and have some very well thought out ideas. Because you really are. I mean, when you think about the state budget and think about what's already spent or already committed to, and then what's coming in, there's not a lot to play with there. And so you're playing a little bit around the edges, or you're trying to be creative about how to create new revenue. And that's back to creating economic development and creating a higher revenue base from the folks that are paying taxes.
Mm-hmm. We have about a minute left. Question?
Just real quickly, Chris mentioned some significant announcements in the Carolinas in the last year or so. Activity's been good this summer, but there still seems to be some hesitation on the smaller, medium-sized companies to pull the trigger on equipment purchase, things of that nature. What would you attribute that to?
Well, it's been, coming out of the recession, it's been harder for those businesses to attract and to raise capital. We've tried to do it by our SBA, Small Business Lending Group, and we're the number one SBA lender in North Carolina. So that's a way to provide capital to small businesses in a more direct way. I think we've got to be more creative as to how we can, whether it's banks or other financial firms, finding ways to get capital to those small and medium-sized businesses in a way that allows them to grow and then, in turn, grow new jobs.
Scott, thank you. Your timing is impeccable on this program, not just at post-merger, but you wrapped it up for us and we're out of time. So please come back. There's more to talk about. Best of luck going forward on this merger.
Thank you very much. Thanks for having me.
Yeah, good to see you again. Nelson, welcome. Always good to have you people from the Midlands. It's great down there.
Good to be here.
Doug, I just don't know what to say to you other than thank you. So thanks for being here. Thank you. Thank you for watching our program. Hope you have a good weekend. Until next week, I'm Chris William. Good night.
Major funding for Carolina Business Review was provided by the Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Novant Health, bringing you world-class technology, clinicians, and care, when and where you need it. Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by viewers like you. Thank you. Promotional consideration provided by Business North Carolina Magazine. For more information, visit carolinabusinessreview.com.